Some ice cold inflation and markets are at all-time highs. Let's talk about it on the weekly update. Okay, friends, let's talk inflation signals cuts. Here's what you need to know. First up, ice cold inflation readings clear a path to the Fed cutting. So before we talk about the inflation readings, let's talk about the market. This is the market, same way we've always been looking at it. Red is the S&P 500, orange is the 50-day moving average, purple is the 200-day moving average, and what do you notice? Well, we continue to be at all-time highs, and we're pushing forward into some new territory here. We got a double shot of good news on both Wednesday and Thursday with PPI and CPI. PPI came in ice cold, CPI came in okay, not great, but that was enough to sort of clear the decks. The runway is foamed, we're ready to go. Next week at the Federal Reserve meeting, we are going to begin this rate cutting process. And so let's take a look at those numbers here really quick as we get into the Fed meeting of next week. First up is PPI. This is the producer price index. So this is the price of inputs. And if you'll remember, the last PPI that we got was not great at all. It was very hot, and it was felt that we were starting to feel some tariff impact there. And it was also there was also some nerves about, if producers are going to be accepting this much inflation coming in, eventually it's going to get pushed out into the consumer space. We're not seeing any of that, at least as of right now, but there are still some questions there that remain on the PPI. But here's where we're at. Month over month for August, previous was 0.7, which was red hot. We were expecting 0.3. We got negative 0.1. Now, what does this data look like to me? I don't know. Is this maybe the tariff hump and we're on the other side of it? Can it happen that fast? I don't know, but all I know is last month was red hot. This month is ice cold. Is the data just are we having difficulty getting the data? Is there some sort of data error here? I don't know. But what I can tell you is economists didn't get close on this one. If we look at the PPI year over year, previous was 3.3. Consensus was for 3.3, so kind of staying at that rate. And what we got was 2.6. Because this month was so ice cold, it's pulling down the year over year numbers. If we look at core PPI, previous was 3.4. We were expecting 3.5, so we were expecting that heat to intensify, and we did not get it. Ice cold, 2.8. So what all of this says is that last month happened. Last month was a very inflationary impulse, and it's thought that the trade war was in some of that. The tariff policy was in some of that. This month was ice cold. Why? I don't know. It's someone smarter than me who knows why, but it'll be interesting to watch as the PPI develops over the next couple of months. We can start to build a theory for why this is. Then we got CPI yesterday. This is CPI. This red here is core CPI, less food and energy. This blue is all items, which includes fuel. And as we know, fuel is kind of taking a lot of inflationary pressure out of this economy. We're floating around. This isn't great readings. It's not good to have core above 3%. It's not good to have headline inflation above 2.8. This isn't a great brew for cutting, but it's enough. It's enough to get us over the line. I think if we would have got ice cold CPI readings like PPI, maybe there would be a double-barreled cut coming next week, maybe 50 basis points, but we're not seeing that. So my prediction is we're going to get 25 basis points, and the Fed is going to be very incremental from here. So this number wasn't good enough to give a double-barreled cut. What does it all mean? Inflation signals cuts? Well, market is at all-time high on the back of ice cold inflation data. PPI came in ice cold, complete reversal from last month. And generally when you see, this is big data, right? This is like the United States, everything that we're importing, every producer is telling you what's happening to, their cost structure. And so when the data is flip-flopping around like this lets you know that something very significant is happening in the economy. CPI came in okay. And maybe that's enough. Maybe that's all we need. We now await the Fed meeting on the 16th and 17th. As of this point in time, my prediction would be, I think, a quarter basis point cut. I don't think we need a half point cut. I know the market is out there kind of pricing that in, but I think that's a remote chance, at least right now. So next week, we'll get into rate cuts. Enjoy your weekend. Okay, friends, that was the video. Hope you liked it. If you found it informative, good, entertaining, I'd love if you could scroll down here beneath the video and give me a like there. It helps us out with the algorithm. And then if you want to be notified first of anything new that we upload to the channel, if you come over here, click subscribe, you'll be the first to know as soon as we upload anything. Appreciate it. See you soon.